The Economic Update with Tatiana Bailey.
In today's update, low and high income households are experiencing a growing divide.
So right now, Dr. Bailey breaks down what leads to a K-shaped economy and why this trend is causing concern for economists.
There is increasing discussion about the, quote, K-shaped economy, which describes the widening divide between low and high income households, not only in terms of the overall wealth level, but also how they spend their money. This is defining with U.S. consumerism about 70% of the economy. A clear pattern has emerged in the data. Spending behavior increasingly reflects whether households hold assets that can absorb inflationary pressures. Households with equity in homes or the stock market continue discretionary spending, while wage-dependent households are scaling back. Economists frame this through the marginal propensity to consume, which is the percentage of income that is actually spent out in the broader economy. Lower income households typically spend roughly 90% of each dollar they earn on necessities, such as housing, food, and gasoline. Higher income households spend closer to 50% because they can divert additional resources towards investments like real estate, stocks, and bonds, all assets that build future wealth. With such a high marginal propensity to consume amongst lower income groups, and with their concerns about the job market and inflation, any pullback has an outsized effect on total demand and on the businesses most reliant on that demand. My own kids have noticed the price shifts, telling me that McDonald's costs twice what it used to. They may call me an almond mom, but I can see the data showing McDonald's menu prices are up roughly 40% from 2019 to 2024, as one example. A recent report shows double-digit declines in fast food visits from lower-income customers. Meanwhile, affluent households are still spending, buoyed by stock market gains and accumulated housing wealth. Luxury hotels report revenue growth, while economy hotels shrink. Delta Airlines expects premium seats to outsell main cabin seats next year. There is a two-pronged risk. As mentioned in a previous segment, 50% of all consumer spending comes from the top 10% of households. A stock market correction could curb that spending in the short term. The other major risk is the 80% of households who spend virtually all they earn and who are pulling back. They are the consumer base of most U.S. businesses. Some of the secret sauce of the U.S. economy has been the ability of households to buy houses, cars, vacations, and the like. As such, a K-shaped economy presents a longer-term structural challenge.